Hi everybody, it's Philip Curry here at Ashfield College. Just to introduce you to our series of night before notes for Leaving Cert subjects. Today I'm going to talk about Leaving Cert accounting at higher level. Okay, a few bits and pieces to start off with. First thing is the practical stuff of the exam date is Wednesday 21st of June. The time of the exam is 2 to 5, and I'll talk later on about the importance of being disciplined when it comes to when you move on from question 1 and you move on from question 5, etc., to make sure you don't get caught for time. Lots of students would get caught for time. Remember, this year we've got 3 hours and we've got to do 4 questions. Last year you had 3 hours and you had to do 3 questions, so it will be a bit tougher. We look at the timing of the questions. Allow 55 minutes for question 1. For the long questions, your first 100 marker, which could be question 5, allow 45 minutes. Your second question, which will be question 6 or question 7, will also be 45 minutes. And then we look at whether you're a costing person who does question 8 or a budgeter who does question 9, allow about 35 minutes for that. And that's all very important. Exam advice then, show all of your workings. As if the figure is incorrect, it's easier for your corrector to trace through the given working. Don't put the corrector on some kind of a search looking for the stuff. Lay it out nicely. It makes a big difference, especially with the online marking for the corrector's point of view. In question 5, make sure to write down the formula. It's worth 3 marks if you get no other marks in that question. Watch when transcribing from calculator to write down the correct figures. Take your time when you're doing that and be exact. Make sure your handwriting is legible and your number formation is good. Stick to the timings above, as you always score better in the first 5 minutes of a fresh question than you would score in the last 5 of the previous question. And don't get hung up either on balancing everything. Maybe trial balance or tabular statements might be worth your while having a look at. But again, if question 1 doesn't balance, it doesn't mean you can't score a very high score there. It's much more important you get out of there and give yourself a chance on a new question. In relation to question 1, we look at worth 30%. We revise the 2 or 3 most recent Leaving Cert questions from the following list: manufacturing, company final accounts, and sole trader. I'd say sole trader is the most one that's due up, if you like. If you cover sole trader and you cover company and you also practice the adjustments for manufacturing, things can't go wrong. All I'm saying to you is don't gamble internally. You need 2 out of 3 of those to be safe. So sole trader and company are the 2 easiest ones, I think. But make sure you don't cut it down to 1, because you need an awful look if you're just operating for 1. And remember, some adjustments that have come up in a different topic might overlap. So you can get an adjustment for manufacturing, could come up in a company or a sole trader question there. Remember, we do 1 from 2 final account question. That's a good little break for you there. Question 1 or question B. For a H1 or a H2, you'd need to scan 97 to 24 for any adjustments that have not appeared in a while, even though I would say that the questions from about 2014 onwards are a little bit trickier, and we're more likely to get questions from 2014 onwards than we are from 97 to 05, when the questions were a little bit easier. Question 1, layout is very important. Workings, examiners like them done separately. You can probably do them in the same order as they are on the exam paper. Figures, take care when transcribing them into the question, and make sure your words written out in full, because the words can be worth soft marks for you there. Question 5 is the next one we look at, and question 5 is known as interpretation of accounts, and we've been told by the SEC it is coming up. It is question 5. It's worth 25%. It's the bank request on the paper. We know it's going to be there, and it's not that difficult to score marks on it either if you have the work done. So you practice, and we look at there's 19 different formulae in total. 5 calculations, I said 10% there. It could be as high as 12.5%. Make sure you label the answers. Make sure you use 2 correct decimal places there as well. Copy in the table of past or projected figures and complete fully. Be careful about projected figures, because they are saying the following figures are projected into the future. It's been up once in about 15 years. Every other has been past. So you're talking past tense there or future tense. It does make a difference. Make sure you observe that in case projected figures comes up in the table in question 5. Usual ratios there, the likes of return on capital employed, acid test ratio, gearing, and the remaining dividend ones. You have to work out all of those. You need a completed table showing the given figures from last year or projected figures for next year versus all the figures for this year. You'll pick up lots of marks if you take the time to work out the extra calculations as per the table. So you're to complete your table there. Do the specific analysis for part B, and it's usually the following. The shareholder's point of view, Do not forget the conclusion. It's profitability, it's liquidity, it's gearing, it's dividend policy. Would you buy shares using borrowed money? Yes or no. You get marks for saying yes or no. Remember, if you borrow 300 grand at 8%, 24,000 euro is going to be your interest charge. You'd want to be buying into a very successful company that's going to pay you 24 grand worth of dividends there on that particular part. Would the bank grant a loan then? And you're going to say yes or no for that particular part. And it's usually going to be very obvious as to what they would grant a loan, because the trends will be going one direction or the other. Debenture holders' point of view, remember, debenture holders, they look for interest, they look for a full capital repayment, they look for collateral or security, as we call that there, and that's their point of view. Need to practice each of these types, but they will come up in the exam. It's good value spending time in question 5. Use the Pilgrim's DD memory technique, and you might have your own one. Lip gloss is what the book uses. However, the exam order is usually profitability, state the obvious, return from risk-free investments, and efficiency are the 3 major ones there. Liquidity, state the obvious, the firm is liquid, the firm is not liquid. Gearing, state the obvious, the firm is lowly geared or the firm is highly geared. Interest cover, you can talk about the number of times that you're aiming for there as well. Dividend policy is also important, stuff like dividend per share, dividend yield, dividend cover, earnings per share, retained earnings per share as well. The gap between earnings per share and dividend per share is also important. The percentage that we are retaining is also very important there. We look at the sector, we look at security, we look at market price of a share. They're all the extra ones there. They're worth less marks, but make sure if you know them that you put them in. Also investment policy. Still question 5, don't forget the decisions. They ask you there in part B. Revise every part C question from 97 to 2022. That should cover you there. Most will repeat themselves several times, but for H1s and H2 students, you'll need to get all of those right. The second question is where it gets tricky, right? And that's where the further you go down your list of revision, the less risky things become for yourself. I'm looking there at the ones I'm looking at. You need the following to be safe. Published, tabular, I should have a comma there for service, suspense, and cash flow. Now remember, you're looking for, you do ratios, you're looking for one of those. You might even get 2 of those. But we can't gamble in this situation. You can't walk in praying that one of them comes up in case it lets you down. So published, tabular, service, suspense, cash flow statements. I'd say service, tabular, published are probably the order I'd be expecting them, right? In a question like service, it's straightforward. It's income, it's expenditure, it's assets, it's liabilities. It's prepaid at the beginning, prepaid at the end, due at the beginning, due at the end. Watch out in case they overlap something from club or farm accounts, for example. They might give you a loan where they don't tell you the actual figure. They give you the loan plus interest figure only, and you have to work back the same as you do in farm accounts or club accounts. For tabular statements, be careful to watch out for questions with VAT. Remember, we collect VAT on sales, we pay VAT on purchases. We can have either VAT due to us or VAT due by us. So due by us is a liability, due to us is an asset. Suspense was all over people's lips last year in terms of predictions, and it came as a short question. A suspense question, I'd say to you, don't go near it unless you're prepared. We're looking at knowing stuff like the Pearls rule, purchases, expenses, assets, always on the left, revenue, liabilities, and sales, always on the right. What did happen goes into the T accounts in boxes, what should happen and fix it, and then you do your journal entries, then you do your suspense, then you do your profit on your balance sheet. You either love or hate that section. If you haven't done practice it before you've seen this video, don't go near it and practice the other ones instead. Cash flow statements, again, a nice question there that comes up all the time, and it wouldn't be as difficult as some of the others. Then we look at section C, and section C is the place where you can come unstuck. We know question 8 will be a combination of costing and flexible budgeting. Do not gamble internally. Don't cover marginal only in case marginal doesn't come up. You need to cover marginal as one section and all the other little costing sections on the other side. It's 20% of your paper. My class always specialise in costing and flexible budgets, where you need to know the high-low method. Be careful on that. There are several little parts of topics that can appear. I've said 27% there, I should say 20%. We need to know the product cost. Look back at 1998, you'll find it on Michael Gallagher's website, egs.ie accounting, which is a smashing resource. And look at the question on 1998. It is the very first product costing question. It gives you a great basis as for what's come up in more recent years. Still talking section C. It introduces over-absorption rates as a topic in the layout and product cost question as well, where you look and you'll see things like direct materials, direct labour, variable overheads, fixed overheads, general administration overheads, and all those ones that I've just mentioned. And that gives you total cost, and you add on the profit and you get selling price. We also have got what's called the easiest section of the course. I think first in, first out. It's only easy if you practice it and you've seen it though before the exam. Remember the structure, to structure the purchases into batches. Purchases always increase stock, my stock level goes up. Sales reduce stock, opening stock. Plus the purchases minus the sales gives you the closing stock in units. And you count back through the most recent batches purchased. So first in, first out means you might have a batch or two batches. The most recent batches mightn't even be opened. And remember, although 4 batches or 3 batches in the exam were purchased for different prices. So when you're counting back to get your closing stock, remember, it's likely you'll have 3 different purchase prices to use. But again, if it's the question you've seen before, it's a nice and handy one. Job costing, need to share the overheads equitably between 3 or 4 departments, which is not a bad question either. We're given a range of bases of apportionment. These are the most common ones. We look at the next page. For example, light and heat can be sorted out by volume, rent and rates, buildings depreciation, floor area, depreciation of equipment, book value, machine maintenance, machine hours, the canteen, sorted by number of employees, and you have to know the highest common factor when it comes to working those out. Practice the highest common factor method when finding the departmental ratios. You could end up with something like 2:2:1:1, which works out to be 6 parts, and you can split it 2:2:1:1 and take your time, because all those questions have got to be right. You get 0 on the exam. Do several of these questions, and they're very handy. Do 0.5 and 0.9 for practice. Reapportionment of overheads was up in 0.7 in 2012. I think it's appeared one time since as well. The reapportionment is usually based on labour hours, but in more recent years we're specifically told to split the service overheads. They might tell you 60-40, 70-30 or something like that. Remember, service overheads must be transferred as it can only be absorbed or recovered through production. The under-absorption, over-absorption topic also comes up in the same question. It's normally part C of that question. Do 2010, 13 and 21 for practice. Having a look, always use the budgeted absorption rates by the actual hours. That applies to part C of that particular mixed question. We have under and over absorption. We have a budgeted set of figures and an actual set of figures. Remember, the budgeted figures multiplied by the actual hours are the overheads calculation method that we use there. That's the only way you can mess up that question. Also know how to do a flexible budget. You can practice 2006 and 1999 are the full version of an ask since. It's an easy topic if you've covered it. Be familiar with the high-low method, which is very straightforward. A flexible budget has got direct materials, direct labour, production overheads, other overheads, administration. That gives you a total cost, add on the profit, and you get the selling price there. Sometimes it's easier to do a full flexible budget question than it is to do the kind of half of an effort where they ask you to show it in marginal costing principles. So I'd say to you do the full flexible budget there. You might have time to do it as well. Do marginal from 2017 to 2020. That covers the whole range. Excuse me, also do the high-low method because it is important. It came in 2017, it came in 2020. Before I look at the time factor of it there, make sure you covered the 0, 6 and 14 marginal costing versus absorption costing question. You use 2 different methods for calculating closing stock. It has been asked before, it could be asked again. And finally there, be disciplined with your time. Best of luck with the exams and thank you for listening.